Welcome to the Molecules and Minerals podcast. I'm your host, Stephen Goldman. I'm a former trial lawyer, corporate director, and an investor. I'm also the CEO and a director of Comstock Metals Limited. I'm here today with Jon Wiesblatt. He's the CEO and director of Trident Resources Limited, a publicly traded junior gold exploration and development company. Trident is building a district-scale gold and copper portfolio in northern Saskatchewan, Canada, with a focus on its gold resource asset in the Ronge district. Trident currently has a market cap of approximately 145 million Canadian, and as of March 31, had approximately $28 million of cash or equivalent in its treasury with no debt. Trident was formed as a result of a merger finalized in January 2023 of three companies: Eros Resources Corp., Mass Gold Corp., and Rockridge Resources. I've actually known Jon Wiesblatt for over 10 years, and in fact once acted for him as a lawyer when he was working as a portfolio manager in Toronto. Even back then, he was smart as a whip, hardworking, and very disciplined in his thinking. I have a number of connections to Trident Resources. Comstock Metals Limited, the company I'm the CEO of, was the former owner of the Preview Southwest gold deposit in the Ronge district, now owned by Trident. In my capacity as CEO of Comstock, I actually negotiated the sale of the Preview Southwest gold deposit to Mass Gold, which closed on March 21 of 2022. As I mentioned a minute ago, Mass Gold is one of the three companies that merged into Trident. As part of Comstock's sale of its Preview Southwest gold deposit to Mass Gold, I joined the board of directors of Mass in late 2022 and remained a director until the end of June 2023. As a result of my role as CEO of Comstock and a former director of Mass Gold, I have some deeper familiarity with some of the key assets owned by Trident, including Preview Southwest and Contact Lake, although Jon has greatly expanded those assets and land packages since taking over as CEO of the merged company. I continue to be a shareholder in Trident, both through my personal holding company and indirectly through Comstock Metals, which still owns over 500,000 shares in Trident. Trident has consolidated approximately 98,700 hectares, that's approximately 244,000 acres, in Saskatchewan's Ronge Gold Belt. Including Knife Lake and other projects, Trident now has a land position of approximately 160,300 hectares in the region. Based on a mineral resource estimate conforming to NI 43101 standards published back in November of 2025, Trident has approximately 2 million ounces of gold in the Ronge district. That's 896,000 ounces on an indicated basis and over 1,100,000 ounces inferred. More importantly, this 2 million ounces of gold does not include any ounces in the Contact Lake Gold Project, which includes the past producing Contact Lake mine operated by Cameco Corporation between 1994 to 1997, which produced approximately 190,000 ounces of gold at a 6.16 grams per ton with approximately 95% recovery. That's pretty high-grade gold. Last fall, Trident completed nearly 7,000 meters of drilling, as well as recently completing an additional 13,000-meter drill program this past winter. Assays from 7 holes from Contact Lake and 11 holes from Preview Southwest are still pending. The drill results from the 2025 and 2026 winter program have been incredibly impressive, including, for example, 70.3 grams per ton over 43.25 meters, 15.11 grams per ton over 51.83 meters, and 17.88 grams per ton over 11.25 meters. A further 20,000-meter summer and fall drill program has recently commenced at Contact Lake, so we're going to see a lot of news flow during the balance of 2026. In addition to its strong financial position, Trident has the potential to also monetize its Knife Lake copper project, which has approximately 200 million pounds of copper, according to an NI 43101 report. I'd now like to introduce Jonathan Wiesblatt. John, welcome to the Molecules and Minerals podcast.
Hi, Stephen. Pleasure to be here. I think you covered the whole story.
I guess we could just end it now, right?
There's anything left to really talk about?
All right. John, can you tell us more about your background and how you ended up negotiating this three-way company merger, which turned into Trident Resources?
Yeah, absolutely. So I call it the front nine of my career, the first half or the first few decades I spent as an early analyst, covering multiple sectors, equities. And then I followed up with the vast majority of that time as a portfolio manager. I was running multi-strat hedge funds here in Toronto, which is where we met, Stephen. I then went on to run a much larger long-only mutual fund, which was called the Sprott Canadian Equity Fund. And I did that for a period of time, and then managed money for one of the largest family offices here in Canada. So I am an analyst and an investor. That is my training. And what I've been really good at in my career is being able to look a little bit beyond the investment horizon, finding key macro or large themes or trends in capital markets, and really finding the best ways to allocate capital to those from an equity portfolio. And that's done through a vast amount of research and analysis. And it's really bottom up stock picking. And so when I left managing money, or I stopped the front nine of my career and moved on to the back nine of my career, as I like to describe it, I became very bearish on U.S. dollar, the debasing of the currency, the rising amount of debt in the U.S. economy, and as a result of that overriding thesis, started to position my own personal portfolios into hard assets. And that can be anything from precious metals, gold and silver, base metals, copper, tin, aluminum, iron ore, or any other type of hard asset like infrastructure, real estate. And what I came to realize is that there was a great opportunity to allocate capital to metals, mostly in precious, underscored by gold and other base metals, really with a focus on copper, with a pending supply disruption overlaid with rising demand. And that took me to a company called Rockridge, and I met the founder of that company. We connected in 2021. And the reason why Rockridge was appealing to me was Rockridge was well positioned in Western Canada, predominantly focused in Saskatchewan, a province that outside of uranium and potash I wasn't overly familiar with, and agriculture, clearly. I had no idea that there was base metals and precious metals inside that province. And Rockridge had a very nice VMS, remobilized VMS copper project in the northeastern part of the province. It was large, 55,000 hectares. It had a maiden deposit, around 200 million pounds of copper, grading between 0.6 and 0.7%. It was at surface. And the really exciting part about Knife Lake, which by the way is still an asset inside of Trident today, what was really interesting about that project was that there was 11 identifiable key targets, exploration targets. And so there was a lot of work that needed to be done. And so ultimately I joined the company as a strategic advisor, and from there became the CEO. I had built a position in the company personally with my own capital. And what I realized was Knife Lake, although it was a great project and there was a significant amount of upside and it was undervalued as represented inside Rockridge, that there was a great opportunity, a larger opportunity in Saskatchewan to go and consolidate other high quality base and precious metal assets in province. And the reason for that underlying thesis was mostly the result of the province itself. So Saskatchewan is currently ranked as the number 3 mining jurisdiction on the planet. I had become very comfortable with it as a mining jurisdiction relative to other Canadian and U.S. states, other jurisdictions in North America. Saskatchewan really was a real focus point for me. And what was exciting about Saskatchewan that other than McIlvenna Bay, which is VMS copper for the most part, that was drilled off and developed by Forend Mining and recently acquired by Eldorado for 3.5 billion. Saskatchewan was very underfollowed, underrecognized for its precious metals potential. And so our group inside Rockridge embarked upon, a journey to go and consolidate. And we did so very successfully later in 2023. We came across a company called Mass Gold. And Stephen, you mentioned it a couple of times in the beginning of your discussion. Mass Gold had four very nice open pit gold deposits with decent open pitable grades. They hadn't done a mineral resource estimate in a few years, and there wasn't a lot of work done on their assets. Tremendous amount of work done on their assets, and they were interesting. But really, the gem or the hidden crown jewel inside that package of assets inside Mass Gold was Contact Lake, and we'll talk about that in just a few moments. And so we started down the path of merging Rockridge and Mass Gold. Mass Gold had, a board of directors that was looking for, a younger team to come in and really, change the thesis, the overall thesis of expanding asset value in the Ronge gold belt, which is where those gold assets are located. And so as we were proceeding down the path of a merger, there was a third company that came into the mix. As you also mentioned, Eros Resources, which was affiliated both at a joint venture project level with Mass. They had common board members and shareholders. And so it was obvious to me to put the three companies together. So aside from the asset value and the gold assets sitting inside Mass, Eros was very interesting to me as it had a portfolio of junior mining companies and some cash. One of the positions on the balance sheet at Eros was Skeena, and at the time that we were merging these companies, Skeena was $6. It proceeded off to $52 per share, and so there was hidden value on their balance sheet, and it was recognizable to me, and an interesting way for us to build a business with that value on balance sheet. So at the end of the day, we merged all three companies. They were companies that weren't performing well in the market. They were all sub $5-6 million in market value. We merged them at a no premium value at around $10 million, fully consolidated. And that was closed. That transaction closed in January of 2025. It took 15 months to merge the three companies. A lot of legal paperwork, Stephen, which you're quite familiar with. It was a 1,000-page circular, which I had to read probably a dozen times, which wasn't overly fun for me. Closed the transaction. We consolidated the shares on a 10-for-1 basis. We raised some money in the spring of 2025. So we raised about $2 million. Myself, my partners in Rockridge, some of the shareholders in Mass, and some, professional acquaintances of mine here in Toronto and Vancouver participated in that round. We were, as insiders, some of the largest check writers into that financing. So we put some cash in the balance sheet aside with the monies and the equities that I mentioned earlier. And then later that summer, we did a small flow through round with two institutional investors at 75 cents. And off we went. We created Trident. We rebranded the company. We rebranded our marketing materials. We published a new investor deck, a tear sheet. We rebuilt a website, Stephen. Off we went to really build the first exploration program at Contact Lake in almost 30 years, which was done later that fall. So that's some context. That's how I got here. That's my professional background.
Jon, you've done a terrific job when you raised that original $2 million post-merger closing. I believe that was done around 50 cents Canadian a share. And I think the share price has hit as high as $4.70, and I think it's pulled back a bit to about $3.60. But still, that's a nice 7-8-fold return. So shareholders, including myself, are very grateful. So thank you. But let's talk about your vision for Trident. What's the potential that you're seeing, and what are you hoping to build over the next few years?
let's start with the map that you're looking at right here, because I think it puts a lot of things into perspective. So this is a lithostructural map, which shows three key geologic domains. You can see the Ronge domain, which runs, perpendicular to Highway 102, which is really the boundary that splits all of our projects. Then you can see the Kisenu domain, which again runs parallel to the Ronge domain. Those two domains make up the Ronge domain. And then, as important, you see that Glennie domain in that lighter color. You can see the label there to the southern part of that map. The Glennie domain is actually host to the CB Santoy mine complex. Santoy is currently the only operating gold mine in the province of Saskatchewan. And so then you can look at the bottom of these litho structures and where they connect or contact, hence the name Contact Lake, is where you'll see the Contact Lake Gold Project. And so we do believe, and not only our company at present and our technological team, but many great geologists of the past and present, including a fellow by the name of Ron Nedolitsky, who you know, Stephen. Ron is a very famous Canadian geologist, a mining Hall of Famer, and is credited with some of the most significant gold discoveries in this country. And so it was his vision that would suggest geologically that there are multi-million ounce deposits located at the base here of these three structures, and there might even be more potential as you move your way, northeasterly as you move through these three geologic domains. And so we've really taken on that vision, and the real reason that vision resonates with me is this province, and I'm going to get to the vision in a sec, the strategic direction of the company. Sure. But I'm just trying to build the blocks to getting there. This province, and specifically the Ronge Gold Belt, has not really been host to a significant amount of exploration, resources, capital, or time. It's always had these very small, high-grade mines. You can see some of them here on this diagram. So Jasper is an example of one. The Comus mine is another. They've all had limited amounts of historical exploration or capital. These mines have always been hand to mouth. And hence they've never really been exploited for their full potential. The region has never been fully exploited for their full potential. So really the vision for Trident, given the land package that we've put together, the high quality assets that we put together, specifically in that Contact Lake Gold Project, which includes the Contact Lake former mine itself, the Preview Southwest, the Preview North, which you're familiar with, which are adjacent to Contact Lake, and then the North Lake mine, just 8 to 10 kilometers directly north of Contact. It's the vision of Trident that we are at the very early innings of what we believe to be an emerging mining camp in the Ronge Gold Belt. Other mining camps have all started off very similar to this. If you've watched history, the Red Lake mining camp wasn't Red Lake until the work was actually done. Same with the Golden Triangle, or the Abitibi in Quebec, and the Ring of Fire in Ontario. These have all been exploited and have maximized the potential of the gold deposits and the geology in those other parts of Canada. But this part of the country has not. You have never seen Newmont or Anglo or Ashanti or Barrick or Agnico Eagle. They've never been in this particular belt. And there's a reason for that. And really the real reason, simply speaking, has nothing to do with geology or rocks. The geology and the rocks in this greenstone belt are just as significant as others around the world. It's been mostly a function of politics. And I don't want to get too much into the political history of Saskatchewan, but in the past, Saskatchewan was mostly dominated by an NDP or a social government, which was not as proactive for mineral exploration or exploitation as other governments are in other jurisdictions. In fact, there was a Crown corporation which preceded Cameco called the SMDC, or the Saskatchewan Mining Development Corporation. And if you were a large gold company interested in one of those that I mentioned, some of those that I mentioned earlier, if you were interested in coming into the Ronge Gold Belt to do some work, you would have to joint venture with that SMDC or the provincial government on a 50-50 basis. So the economics were disadvantageous to those organizations and really kept them out of the province. And so a lot of that capital would have come into here under a different regulatory and regime, went elsewhere in Canada. Well, Stephen, that's completely changed. Saskatchewan is as forward-looking for mineral exploration, development, mining, natural resources, and expansion as any province in our country. They're at the forefront of this. I know that firsthand from my visits with the provincial government in the recent past. In any event, to summarize, the vision is to scale the potential of the assets in our company to multi-million ounces of gold deposits and to embark upon building the next real true mining camp in Canada. That's the vision.
So before we get into more details on the particular resource and the drilling results, one of the things that I've been quite impressed with is, for a junior mining company like Trident, you put together quite an experienced and impressive team, both in management, the advisory team, directors, and perhaps you could just kind of briefly go over the background of your team members and in particular highlight kind of their specific experience with this region and the mine itself.
Let me back up a second. As a former portfolio manager, I've invested in hundreds of companies, and many of those have been junior resource companies with the focus on Canada. But what the best investments that I've ever made in the past, I've always started and ended with the people, right? It's the building the right teams. That's the common thread. So you need people, you need a product or a project in the case of a resource company, and you need price. Those are the three P's as I like to refer to them as. And I overweight people always. And so let's look at our technical team. We have recently, well, not recently, I guess 16 months ago, we hired a geologist who's become our VP X. His name's Cornell McDowell. Cornell is located in Western Canada and is focused most of his attention on copper golds in Western Canada and other jurisdictions. He's got over 2 decades of experience. Cornell is very astute. He is a big thinker when it comes to looking at large scale ore bodies such as the Ronge gold belt. And he's very organized. He runs a very good program, and he's now drilled 20,000 meters with his team into Contact Lake and has done an extraordinary job. And you can clearly see that in the results of the drilling that's been done. So that's Cornell. That's our VPX. We also have Andrew Ramcharan, Dr. Andrew Ramcharan, who is a former employee of Sprott. We never crossed over at Sprott because Andrew worked on the lending side. So he's worked on project evaluation, resource modeling. He's our investor relations and business development leader. So a very, very solid person working on the corporate finance part of our business alongside myself. We also, and Andrew's built out a phenomenal team. We have a great group in there in-house working on helping to spread the message of Trident to the masses. And then also on the technical team, Paul Kramer, who has joined us from SSR Mining. SSR, you can see, is represented on the map and on your screen. CB Santoy is owned by SSR. SSR has been operating in this, and that mine has been operating for almost 30 years. Paul Kramer has been working at the CB Santoy mine complex for the previous decade. He knows orogenic gold systems and structures better than most, if not the most, in this part of the country. And he brings a tremendous amount of technical capabilities and knowledge about orogenic gold and these types of structures over to Trident. So that's the team. Our back office is phenomenal. We have a great CFO, Chantel Collins, who makes sure that our balance sheet is in check. And my partner, I must mention Jordan Tremble. Jordan joins me through Rockridge. He's the president of our company. Jordan's been operating in Saskatchewan and northern Saskatchewan for almost a dozen years now. He's a CEO. He's the founder of a company called Sky Harbor Resources, which is a junior, very exciting uranium company in the Athabasca Basin. And Jordan is very, very competent and phenomenal at capital markets, and his provincial expertise is very helpful. So it's a great executive management team, and I'm very proud to have been working with these people for the last 18 months. The last and most proud thing that I will mention is our board of directors. We're chaired by Tim Termundi. Tim is the chairman of Eagle Plains Resources, a prospect generator here in Western Canada. He's been on a number of exits. He's worked these assets in the past, and Tim works with me day to day. He's not your typical chairman. He is very active. He's a geologist of over 30 decades. Ross McElroy joins on the board as well. Ross has tremendous amounts of experience working in Saskatchewan as a both a geologist of over 30 years. Worked on some of the discoveries in the north with Cameco, including the McArthur River mine. Ross is a prospect generator for gold throughout the province of Saskatchewan, and he built and sold a company called Fission Uranium for 1.14 billion to Paladin Energy back in 2024. And then the board's rounded out by, myself, by Jordan and Joseph Gallucci, who brings a tremendous amount of capital markets experience and sits as the head of mining banking at Ventum, which is a boutique independent investment bank here in Canada. And then, Stephen, and I know this is very long-winded, but again, it all starts with the people. We have a very competent advisory board, anchored by Ron Nedolitsky and joined by Scott Brofton and David Chan. I already talked to you about Ron Nedolitsky. You know him quite well. And David Chan is the former underground geologist at Contact Lake for Cameco back in the days of its discovery through its production. And he brings a wealth of knowledge and experience. So that's the team, that's the group, and that's who's going to help lead that vision that I described earlier.
It's a great team that you put together, Jon. I have to congratulate you on that. So back in November, Trident updated their mineral resource estimate. And I just brought up the slide there. So this is really on 4 of the deposits. That's the North Lake, Preview Southwest, Preview North, and Greywacky. And you can see there where the numbers came out. So the 896,000 ounces indicated and the 1.129 million ounces inferred. So that was nice to see that update at the time, and that was also around the same time that you had started, I guess, your fall drill program, 2025 drill program, which you got some pretty terrific results.
Yeah, so let's talk about the numbers that are sitting in front of us. So when we received the historical resources, when we merged with Mass Gold, they were set much lower, 1.2 million ounces in aggregate, at a fairly, I guess, similar grade profile. We underwent some modeling. We changed some of the metrics in the constrained pits, which is now what you have to do to conform to 43101. And the end result, only using a $2,800 dollar per ounce gold price, which is very conservative. Gold prices have been as high as 5,600 and are currently trading in and around $4,300 per ounce. These were calculated again at 2,800. We resulted in an 80% increase to the mineral resource estimate of just over 2 million ounces. So that's a really good foundation for us. There's a couple things that I would like to point out, that the vast majority of these ounces that you see before you are in close proximity to the old Contact Lake mine. And so when we talk about our vision of a mining camp going forward, that's going to come significantly into play. So that's point number one. Point number 2 is the clear omission from this chart is Contact Lake. So Contact Lake does not have a 43101 mineral resource associated with it. We are going to do a lot of drilling, a lot of work at that project, both 25 through 26 and into 27. We do believe we will have quite a significant amount of data by the end of this year. We are still debating internally whether or not we wish to publish an MRE on Contact Lake. And really, the main reason for that, Stephen, is our focus right now is scaling ounces at that old mine site. I don't want to take any of that focus away from our technical team, by working on that MRE. Like really the clear focus now is building ounces, high quality, high value, very profitable ounces at Contact. Just one last point about Contact Lake in the resource estimation. When Contact Lake was first opened by Cameco in the early 90s, they contracted Caminco to go and run an internal resource estimation. And the resource estimation that was published in the early 1990s, and you can go and flush that out on certain Saskatchewan government websites, was around 700,000 ounces at a resource grade of 8 to 10 gram. And that was split evenly for the most part between the known mining area and outside the known mining area. And then Cameco went on to mine 200,000 ounces, so leaving about 500,000 high-grade ounces behind. And again, calculated at much lower gold prices with, much different dynamics as to the way things are calculated today under 43-101. So there is substantial amount of resource left behind, and our drilling has only increased our confidence of more resources at Contact.
I think that the Contact Lake project was, I think you refer to it as a hidden gem, and I think it truly is. It's a great background story about how Mass Gold ended up acquiring it. Maybe you can sort of talk about that, because in a way, this is an amazing story.
So when Contact Lake was closed in 1998, after producing just a little less than 200,000 ounces at 6.16 gram per ton, Cameco made the executive decision to spin all of their gold assets into a company called Centerra. So that was done later, I believe, in 1999. And this particular asset, Contact Lake, this one was reclamated to the full extent of the standards of the provincial government of Saskatchewan. They were very strict with how the site was to be cleaned up. They decommissioned the mill. In fact, there is no signs today of an underground mining operation at Contact Lake, very little. And the asset was put into the institutional control program of the Saskatchewan government in 1998, where it lay dormant. Nobody knew about it for 25 years, which is why it probably never fell into the hands of a much larger company to at least go and do the work that we're doing here today. And that's fortuitous for us. But Mass Gold, as I mentioned, through Ron Nedolitsky and a team, they've been working in the Ronge Gold Belt for several decades. They were very familiar with this asset and the closing procedures of it and that institutional control program that it went into. And in 2020 through 2021, that leadership team lobbied government to bring it out of the program. And I believe in 2021, it was brought out of the institutional control program for 165,000 Canadian dollar bond payment that was made to the government. And it is the only asset that's ever been removed from that program, Stephen. So it is a flagship asset of the provincial government. It is important to the development of the economy of the northern part of the province. And it is fully supported by the provincial government and the various ministries. So that's how it was acquired. And again, we acquired that through a merger. There has been, and the last point I'll make now until we move on, there was no work done on this project for almost 30 years until Trident did the first inaugural program in the fall of 2025.
So I put up this slide. This is, I guess, where you have focus. And I understand that Cameco actually didn't do very much deep drilling. If I recall, the deepest drill hole they had done was like closer to 350 meters.
Yeah, so that's correct. It is my understanding through conversations with former employees of Cameco who worked in the gold group. It's been explained to our team at Trident that the world ended for Cameco at 200 meters. We're not really quite sure why. It might have been a function that Cameco was a very sophisticated exploration company and now obviously development and producer for uranium with limited experience back in those days for gold exploration relative to the size of the uranium business. So that might be one of the reasons. But we believe that the real reason that the world ended for Cameco at 200 meters was not due to geology, but due to the gold price. It was not a very profitable undertaking for them to go and drill really all that deep. And so a lot of the assets that Cameco had worked on in their gold business throughout the Ronge Gold Belt in the 80s and the 90s, they were shallow operations, shallow deposits, high grade, with never really any great deal of exploration below that level. Contact Lake was built down to, and you can see it here on this map to orient everybody on this call. It was built down, the infrastructure was built down to 340 meters. However, the vast majority of mining was focused in and around that pink shear zone called the Baco Shear Zone. You can see the ramp was built down to 340 meters. To put 340 meters into perspective for your audience, Stephen, the CB mine, which has been mined out now by SSR, it mined down to 1.3 kilometers.
How close is that to your mine, to the
About
contact link?
about 80 kilometers directly northeast. And the Santoy mine, which is the only producing mine in Saskatchewan today, is currently being mined down to 750 meters. So what that tells us is that these similar orogenic gold, systems, they run deep and the grades can continue at depth. And so if you look at this map here, you can see at the lowest level of infrastructure, there are some exploration drifts that were built below the underground mine workings by Cameco. However, it's not fully understood by us exactly how much underground drilling was done to confirm high grade, mineralization at depth, which is really the opportunity for Trident, one of the opportunities to extend mineralization in our forthcoming summer program. So one of the key things that we are going to be doing is we are going to drill some deeper holes as we believe that the mineralization, it trends to a southwesterly direction underneath that main zone. In addition to that, we've been very successful at extending strike length to the northeast along that BK3 zone and along Contact Lake through our winter program. And it's also our aspiration and ambition to extend the strike length to the west, where you see very little work done by Cameco in the past. So the entirety of the Contact Lake deposit remains open in all directions.
You and I chatted briefly yesterday, and one of the things I just never really appreciated until our conversation was the amount of underground mining structure that still exists. And perhaps you could talk about what does exist and maybe the value of it.
For sure. So the entirety of the project that you see in front of you, it was put into production, I believe, just prior to the mine commission in 1994. The total dollars quoted by Cameco in some of their closing documentation was 65 million Canadian dollars to put this asset into production. And I believe that would include an on-site mill. Okay, that's very important for the future development of the asset. And just to put that those dollars into perspective, that would result in something like 125 million in modern day dollars, Canadian dollars. And then you can see the infrastructure. So they built the ramps down to the 340 meter level. You can see some adits here, some exploration drifts which move under the lake, under that BK3 zone. That's that long gray line that you can see underneath the shear there. And then you can see some of those exploration drifts also below the main zone 1 and BK2, the main zone 2. And you can see the opening up there near the top of the main zone, the ventilation shafts. So this was a well-built asset in the early 1990s. There's a tremendous amount of infrastructure, which we now believe is underwater. However, our discussions with previous mine managers at Contact Lake suggest to us that this is some of the most competent rock that they've ever worked in. And so if that holds true, we do believe that this infrastructure should be in very good shape, which would ultimately provide us with the opportunity to, at some point in the future, potentially dewater this asset, make our way down to those lower ramps, which we believe are probably open and in pretty good shape, and to extend the mineralization at depth with more efficient underground exploration drilling. So that's a bit of a backdrop on infrastructure and value.
The slide I just pulled up, that's from your presentation, I think it's slide 17. This is kind of a little bit of a summary of those impressive results, and maybe you could highlight so far what you have found.
Sure. So let's talk about where we've been, and then we'll leave off with where we're headed.
Perfect.
So we started off a very small exploration program in the fall of 2025, 7,000 meters again, the inaugural exploration program for Trident, and the first exploration drilling that was done at Contact Lake in almost 30 years. We drilled 7,000 meters, which focused shallow, mid-shallow, and then there were some deep holes. And I'm going to finish off with the deep holes because that's very important for the upcoming summer program. What was very important about 2025 fall was 100% success rate. We hit mineralization in all 19 holes that were drilled. The highlights here you can see, so hole 3, which was drilled along that shoreline. And let me take a step back. The shoreline, or as we call the buffer zone, is very important. You cannot drill within 30 meters of the shoreline, both on land and on ice when we're drilling in winter. However, Cameco did very limited drilling along that buffer zone. So we started there and we started shallow and we hit hole 3. And hole 3 uncovered, 7 gram over 43.25 meter, which really got investors and market participants very excited. And then you can see further down, we drilled hole 6 and 7, which were mid-shallow holes along that shoreline, which also showed very good mineralization and extended some of the strike to the north-northeast. And then we followed up that program later in the fall with hole 16, 17, and 18, which were drilled well below the underground mine workings. And those holes were drilled to a total depth of 650 meters, but in a parallel depth of, I think, up to 550 meters. And hole 17 and 18 were highlights. They showed very good mineralization well below the mine workings, which is going to really be very interesting to see how we follow that up here in the summer of 2026. So let's move to the middle section of this slide, the 26 winter program. 10,000 meters were drilled at Contact Lake. 2,500 of those meters were follow-up to some of our fall drilling along that buffer zone along the shoreline. But the vast majority, or the 7,500 meters, were drilled over the ice, 44 inches of ice to be exact. We had 2 rigs spinning all winter. Our drilling went on that ice from the 3rd week of January through the 2nd week of April. We got off to a slow start because the weather was mild, but the spring was quite cold, minus 40 degrees Celsius, Stephen. And we drilled 7,500 meters into an area of the Contact Lake deposit called the BK3 zone. The BK3 zone is very important because it was defined, it was delineated. A lot of work was done by Cameco. They pushed that underground exploration drift under the lake. They set up a mining. They set up a mining stope. They were getting ready to go and mine it, a very high grade portion of the deposit, and then they closed the mine in 1998 and left it behind. So we did a lot of work there, and you can clearly see the results from that underground drilling that was done from the lake. 52 meters, 15 gram material was the highlight in hole 36. That was done quite a ways away from any of the historic drilling done by Cameco. It was done slightly deeper. The mineralization was quite consistent throughout the entire hole. One thing that I really want to point out for some of the more technical members of your audience is Cameco focused on that Bacchus shear zone, which was highlighted or denoted in that pink coloring on the previous map that you showed. And they really identified the hanging wall mineralization. They knew about the footwall mineralization, but never really focused their exploration initiatives there due to lack of capital, lack of budget. And a lot of our drilling, both fall and summer, has really gone through that footwall, much lower and further away from the hanging wall mineralization. And so that's really garnered a lot of excitement in our technical team, at our board level, our executives, and some of the people that are paying close attention to our story. So that's where we've come from. We've drilled in aggregate about almost 20,000 meters at Contact Lake, which is pretty good relative to the 50,000+ meters drilled by Cameco historically. And then going forward, we're going to be drilling 20,000 meters. Most of that is going to be at Contact Lake. We're going to follow up mostly on land. We'll do some oblique drilling under the lake to just follow up to some of the high grade you see here in those middle sections. But the majority of the drilling and the meterage is going to focus in on that buffer zone along shoreline. But really, Stephen, the exciting part is going to be the holes that we're going to drill deep. We will drill some holes up to 900,000 meters, which will really give us an indication of how deep this thing is running. Again, the analog being CB Santoy drilling down to and mining down to 1.3 kilometers and 750 meters.
Sorry, did you say 900 to 1,000 meters.
Correct.
That's terrific. You almost glossed over it, but that hole that you came up with, the 15 gram per ton over 52 meters, that's a blockbuster hole. You must
Yeah,
have
so
gotten a lot of attention from that.
that's one of many very good holes. It is the best one that's been drilled to date. It was about an 800 gram meter, which is what some people use as a measurement of success for exploration drilling. This is one of the best holes that's been drilled in Canada over the last, or at least a top decile hole drilled in Canada over the last year or two. But this comes as no surprise really to our group. We know that this is a very high grade system. We know that these orogenic gold systems have very high grade pockets, and that's just going to play into the very economic development of the asset moving forward.
You still have assays that are outstanding from your winter drill program. I believe, is it 7 holes still to come from Contact Lake and another 11 holes from Preview Southwest?
Correct. 18 holes in total, 7 from Contact, 11 from Preview Southwest. We haven't talked a lot about Preview Southwest, but that is a very important part of the overall story. And there will be some regional work being done there this summer. Again, Stephen, this is a regional play. There is a lot of indication that there are multiple large deposits in and around the Ronge Gold Belt, and we feel like we've tied up a lot of the land that's going to be able to exploit those deposits. And Preview Southwest is just 2.5 kilometers from Contact. It's a very short jog. There's a 4 kilometer trend called the Preview Trend, which definitely has a lot of potential upside. And so there will be some drilling at Preview Southwest later this summer, some soil sampling in and around that area, and some other regional geology.
Okay. Well, as you know, I negotiated the sale of Preview Southwest, so I have some familiarity with that asset. And I know it's been a while, but I recall one of the holes had over 600 grams per ton over 4 meters, which was pretty impressive. So I look forward to the results from your 11 holes from Preview Southwest.
There is no doubt that there is very high grade, ore shoots that have been intersected at Preview Southwest. Um, you can be assured that a lot of this stuff will be followed up on. There was never a very large drill program that's been done at some of these adjacent projects, and that's mostly been a function of the markets, right? When I believe Comstock was operating in the area, one of the predecessor companies that owns Preview, the gold markets were quite weak. Access to capital was poor. It was a different environment. It was a different environment. So now under Trident, we have the balance sheet, we have the potential to go in and do a lot of the follow-up that, some of the companies like yourself, Stephen, laid the good groundwork and foundation for success here. So thank you.
Thank you. So let's talk about Contact Lake and its value and the size of it compared to, I guess, your overall assets. I put up a slide that is in your presentation. It's slide 21. I guess it's valuation. You and I have talked about the fact that because of Contact Lake being very high grade, a past producer, formally permitted, the underground infrastructure, etc., that the value per ounce of gold found in Contact Lake is higher than perhaps other places in the Ronge. So perhaps you can take us through kind of your view of this, and let's kind of understand how this intersects directly into value creation for shareholders.
For sure. So I'm going to put on my former PM hat to answer this question, Stephen. This is one of my favorite slides in the deck because it really sets up the value proposition for shareholders and why every junior mining CEO, in fact, every CEO thinks their stock is cheap, but I'm going to tell you why this one is in particularly incredibly undervalued. So you can see here we're trading around $65 enterprise value over ounces in the grounds. That, relatively speaking, is cheap. The average here in the group is around 130. So we trade at roughly half the value of our peer group.
And to clarify, that's just for the 2 million ounces, excluding Contact Lake, more or less.
Well, that's for our company as a whole. Now,
Okay.
let me break it out. Let me break it out for you.
Sure.
So the 2 million ounces on our balance sheet are being valued by my assessment at this valuation 65, which is still cheap. So if I were to put a conservative valuation, enterprise value per ounce, on the 2 million, which are the adjacent projects to Contact Lake, so that's Preview Southwest, Preview North, that's North Lake and Greywacky, 2 million ounces. I would probably use a more robust valuation than you're seeing here, but a conservative valuation nonetheless of around $75 per ounce. I think that is very conservative. That's $150 million of value right there. That's greater than the current market cap of our company. And then you have Contact Lake, which is a real head scratcher, and really the diamond in the rough, the value driver in the near term for us. If you were able to wrap your heads around an appropriate amount of gold at Contact Lake, I think I walked you to at least 500,000 ounces as per Cameco's admission way back in the early 1990s. And you were to layer in some growth, assuming that Trident has been successful at adding ounces, which is, I think, a fair and reasonable assumption to make. And you were to put a number of ounces in the ground at Contact, plus the infrastructure, plus the premium for, past production, past permitting, on-site mill, directly close to power, mining community, the Saskatchewan provincial government, excellent First Nations relationships within Trident at present. I think that if you were to look at other comparable assets in other parts of Canada, good jurisdictions, for high-grade underground deposits like Contact Lake, you could probably put somewhere between a $300 and $500 per ounce valuation, conservatively, on Contact. And so when I start to do that work in my own mind, and again, we have not published a 43101 deposit at Contact Lake, so it would not be appropriate for me to give you a number because we just haven't done the work. But I do believe that Contact Lake has the potential to be present day, right now, not 12 months from now, like some of the analyst targets like to suggest, a value of anywhere between 500 and 600 million, okay, plus the $150 million for the other 2 million ounces. That gets me to, conservatively a $600+ million valuation for a company trading at $140 million today. And so I do see a significant amount of upside. And where I do see the disconnect between us and some of these other companies is I want your audience to really understand Trident's a new company. It's only been around since the beginning of 2025. We're less than 2 years old. Many of these companies have been telling their stories for many years. They've been undergoing many exploration programs for many years. They're several thousands of meters of exploration ahead of us. They've had the opportunity to sit in front of institutional investors, sophisticated investors for much longer than we have. And they've been trading in the market for many, many years ahead of Trident. So I think that the valuation gap between them and us is a function of time and not a function of quality or opportunity. So I do believe you're going to see that, that compression happen in the forthcoming months. You've seen it already starting to happen over the last 6 months. I will let you know that Trident is one of the best performing junior gold companies on the market. We won the TSX 50. We were part of the TSX 50 last year, one of the top 50 performing equities on the TSX Venture. So we are starting to do our job. I've actively been on the road meeting with as many investors as possible, all the way from the largest gold investors in Canada, North America, and abroad, all the way down to small retail investors. We're doing our best to market and get this thing out there. We participated in many conferences. So we're doing our part to close that and narrow that gap. I think you're going to see a much different valuation paradigm for the shares of Trident going forward.
Encouraging. So what about valuation being affected by the actual size of the resource? I mean, clearly a company with 2 million ounces that's indicated is going to be worth more than 1 million ounce, and a 3 or 4 million ounce resource is going to be worth that much more, and attract different kinds of potential partners. So are there targets you're hoping to reach? I'm not saying you're going to reach them, but what's your thinking on that?
So I always like to do relative valuation work when I'm thinking about our company. And so there are some common threads that we can make with the SK Creek deposit in the Golden Triangle in British Columbia. That's owned and operated by Skeena Resources. Skeena is a company that I'm incredibly envious of. Their management team and their board has done a tremendous job at not only acquiring that asset, stewarding the asset through a bear market, growing it again to a 4 million plus ounce gold equivalent deposit, financing it for a $1 billion mining project, and hiring a phenomenal team led by its CEO to go in and build the mine and bring it into production. Like cash flow is on the horizon for this company, but they are a 4 million ounce deposit. It is high grade. And so when I think about what I want to be when we grow up here as a company, I look at a project like SK. SK is 4 million. It is open pit. It is British Columbia. It is somewhat more of a complex deposit than what you find at Contact Lake. But again, the company's done a phenomenal job. And the market cap of that company with, I believe it is a sole asset inside Skeena, it's been as high as greater than $5 billion Canadian market cap. And so, although I do believe that Skeena has done a phenomenal job and much more advanced, there's going to be cash flow in the near term. I think that I want to be on the path towards a valuation like that. So, what do we have to do to accomplish that? I think we have to put the real focus on scaling our operations, building high quality, high value, high grade ounces today with a focus being at Contact Lake. I think that that's the asset most advanced. But it would be dismissive of I to not really focus on some of the other projects as well. There is growth potential on all of these deposits in and around the Ronge Gold Belt that are owned by Trident. So when you look at the value, when you look at the values that Skeena has traded for on a per ounce in the ground valuation, which is not always the best metric, like they're moving now towards an asset valuation or a discounted cash flow model valuation basis. But when you look at what their ounces have traded for in the market, they've been, I believe, as high as $1,500 per ounce, fully warranted. But us here sitting at 67 versus 1,500, I think is too cheap. And so that's how I kind of think about valuing the shares of Trident.
Is Trident considering getting a strategic partner or any other type of strategic investor to help them with technical and financial resources?
That's a great question, Stephen, but I'm going to answer it very generally and very broadly. I don't know if I feel comfortable answering it in details as it pertains specifically to Trident.
Fair enough.
I believe that any junior resources company, whether it's a gold, copper, iron ore, whatever it may be, can gain a lot from partnering with a larger, more sophisticated company with huge amounts of intellectual property, intellectual capital, and financial capital. Right? I don't think Trident's any different. So, in order to advance our project, I just described to you SK Creek. Right? It is a phenomenal project. In order for us to one day advance to a stage like that example, it would be a lot faster and a lot more effective if you were to have a partnership with a large company that understands organic gold systems, better than we do. And so it is something that I think all junior mining companies should consider. Fortunately for us, capital has been readily available to junior gold companies like ours. So it's not necessarily capital that we crave more than the expertise, right? The knowledge, the sophistication to go and help us really exploit and accelerate the opportunity.
Let's move on to your Knife Lake project. That's a copper asset. I've listened to some of your previous interviews, and you've talked about the fact that you really want to have Trident focusing on its gold assets in Ronge and Contact Lake, and that this is something that you perhaps would consider monetizing. What do you want to do with the Knife Lake copper asset?
One of the biggest mistakes that junior mining executives make is that they have a lack of focus. Okay. So they put a bunch of assets into a company, good assets, and then they dilute their technical capabilities and their balance sheets by focusing on too many things. What Trident wants to do is we want to be really, really good at one thing. And we think that that really good thing is the Ronge Gold Belt and the assets that we have in that particular part of Saskatchewan. So it is my expressed goal and strategic vision to really scale and build that part of the company. Like we think that the value creation for shareholders is going to be in the gold exploration and hopefully one day development of these particular assets. And so we do have this other asset in our company, and I refer to as hidden value for investors, more hidden value in our company, which is amazing. And at $67 per gold equivalent ounce in the ground, enterprise value per ounce in the ground, we are actually getting like probably negative value for Knife Lake. Knife Lake has 200 plus million pounds of copper at surface in Saskatchewan, very good grades, 100 kilometers of more or less directly north of Macabena Bay, which was Foran's asset sold to Eldorado for 3.5 billion, with tons of exploration upside. It's a 55,000 hectare land package. And so we're just not getting credit for it in the share price. And it's disadvantageous to our shareholder base right now. And so what we would like to do is, again, we'd like to focus on Ronge Gold. We'd like to enhance shareholder value. And all roads are pointing to the monetization of Knife Lake as a mechanism to satisfy both of those things. And so we are actively looking to return some of that value to our shareholders. There are multiple ways to do it. We can joint venture, we can outright sell it, we can option it out, and we are considering all of the above. And so copper, I don't know if you're noticing, but I'm sure you are. Copper's trading at all-time high, $6.50 a pound, and it might be, in terms of base metals, it might be the best supply-demand story shaping for the next couple of years.
Yeah, it should be a very attractive asset to sell. One topic I forgot to ask you about, and I'll ask about it now. You've got another 20,000 meter plus drill program for the summer and fall. As of March 31, you had about 28 million. I know you're spending some money now, but what's an average cost to drill a meter?
So your all-in sustaining cost per meter in the summer and the fall is going to be in and around $400 Canadian per meter. We believe that we can lower that as we expand our program going forward. But right now it's steady, responsible growth. So remember, balance sheet preservation for cyclical companies is of paramount importance to me and our company. So we're going to be mindful of that. So we're going to just slow, steady growth. But $400 per meter Canadian for summer, fall. Winter's a little bit more. You have to build ice. You have to have a little bit more people on site. You have to pay closer attention to safety than winter. So you're probably trending closer towards $450 per meter in the winter.
Makes sense. So you got at 20,000 meters for the summer, fall, you're closer to $8 or $9 million Canadian, it sounds like. So you've got plenty of cash in the treasury to fully fund that program.
Absolutely. Fully funded for the balance of 26 exploration. I mean, those are flow through dollars. Those are going in the ground. Our shareholders came in to that financing, which was done in February. That was their expectations, and we're executing on that. But we do have lots of hard dollars, Stephen, to weather the storm. The markets have been a little bit choppy right now, and it's always a reminder to me and our company, our board, our executive management team, always act responsibly, because you can control what you can control, but you can't what you cannot. And the commodity markets and the global macro and, two global wars, and we're mindful of that. So we've managed to put, enough SG&A working capital on our balance sheet that will last us for several years.
That's terrific. And perhaps Knife Lake will add some non-dilutive financing as well. So we'll see. So any other matters that we haven't covered that you'd like to discuss?
We have an incredibly tight share structure, which is very uncommon for companies like this. There's 39.5 million shares outstanding. We don't have a whole lot of options that have been granted or issued. The company is got a very tight shareholder base. We are predominantly owned by high net worth and, small family office and retail, with a small sprinkle of some institutional investors. I would suggest that as we grow, as we continue to execute, the institutional investor mix of our shareholder base will improve, will increase. And we're just really excited to keep enhancing shareholder value. We have a fully funded exploration program. We're clearly very undervalued. With great relations with the government, the provincial government of Saskatchewan. First Nations relations is very strong. And yeah, we're a growth company and primed to execute over the next 6 to 12 months.
Thank you so much for sharing your thoughts today on Trident. I have a disclaimer to make. So, this podcast is for information purposes and should not be considered investment advice. The content of this podcast should not be considered a recommendation to buy or sell shares in Trident Resources. Investing in a junior gold resource company such as Trident should be considered high risk. As disclosed earlier, I am a shareholder in Trident both personally and indirectly through my role as CEO of Comstock Metals Limited. And with that, Jon, thank you so much. This has been terrific.